So as the title states, we're going to be talking all about the use of the line chart today to allow you to find and identify order blocks and areas of supply and demand much easier. It's also going to allow you to find much better profitable trades. So make sure you watch this video all the way to the end so you don't miss anything today. Now, if you're looking forward to watching this today, don't forget to give me that thumbs up. It's going to help me to know you're enjoying these videos each and every week I'm doing. So we're on the pound US dollar pair and we're going to start on the daily time frame. Now, the first thing I want to do is go through understanding reading the line chart, because this is where many people are going to struggle. Most of you are using just candlesticks. Now, you don't need candlesticks to read price. You can read the market with a line chart. There is everything you need to know on this line chart except for where the manipulation phase will go, understanding wicks in the markets. This is going to show you the close price of each candle. So what we're looking at first is we're going to use the line chart to identify, and let me just use my drawing tool instead, to identify the market direction. Now we have this high in the market, we then break this structure and we create a new low in the market, or new lower high. This is a new low. We then break that low, make a new low here, a new lower high, a new lower high, a new break of structure, and then we make this new low. So easily you can identify where the market is making that trend direction. Now you can also use an area where the market pushes down strongly, as you can see within this line chart here, this area here, and this area here. You can identify the momentum where the move has come and dropped heavily to the downside. You can also see where we have a consolidation area, again, where the market pauses before we see that move down. And the way I've got these boxes drawn at the moment, you can also identify where the market starts to lose steam to the downside. So the line chart can show you the trend, it can show you the momentum in the market, and you're also going to find inside these pushes down here what we call that area of imbalance, where price is going to go back to rebalance the market. So understanding that, let's now go through this pound US dollar chart and see where the market is actually now going. Again, this was our last lower high in the market. Now we can identify this by drawing a line to these 2 points. You can see the market is bearish, but now if we draw this point to this area, you can now identify the market's gone higher. So no longer is the trend intact. Again, we can mark off these 2 points and those points. We can see the market is still bearish until this point here. Now you can also identify this by simply drawing a line from this lower high where the market breaks out, which is that break of structure, leaving a new low here in the market, a potential new higher high, and this could be a new higher low. Now this isn't confirmed yet until the market goes up from here and breaks this high for a new higher low in the market. But you can still look for trades here if you understand what the market is doing. So looking at the market here, we can also see this V pattern. Now, when you see a V pattern like this, on most occasions, so to say, this is very likely to show you a potential reversal. It's also where most will be looking at inverted head and shoulders if you use those price patterns. I don't myself, but this is also showing me that the market is making a shift in direction. But where could the market go to? Well, remember this area of consolidation. What is that going to leave behind? That will leave behind an area of supply in the market, or your order block. So if we now just remove everything off the chart, I'm going to draw out this area here and we make this an area of supply. If we then go back to price on the chart, you can identify straight away this is the candlestick. Remember, we're not going to see the wicks on the line chart, but this is the candlestick. It's the last bullish candlestick before the momentum move to the downside. That shows to you that the market is bearish. And it also gives you that order block you want to be looking to trade from. And it's also our area of supply. So here, you'll be looking for the market to come back up into this area of supply to look for a bearish move. Now, there is what we also call an area of imbalance, which sits inside here. And this area of imbalance is, in fact, let me just draw that out, our area of imbalance where price reversed from to pull back to our area of demand, which sits here. So now we have our zones. Now if we go back to the line chart quickly, you can still identify this is our area of supply or our order block based on this area on the chart where we see price making that consolidation before we drop away. There's no strong movement here, but there is a strong movement away from this area. The same this area here. We can identify this becomes our order block or area of demand once we see price breaking this structure of a strong move away. And now price is putting back into this area of demand. We can now look for potential longs from here back up to our area of supply. Now, looking at current price, if we go back to the chart, you'll also be able to now draw out from this wick to this low is a leftover area of imbalance, which is even more convincing to me that price will want to go back up to take this area, fill it, and go into area of supply, where we can then start to look for potential sell. So that's understanding the line chart on the daily time frame, so we can see what's happening here. How would we then use the line chart to find that lower time frame entry? Well, simply all we would do is use a change of character or that confirmation reversal entry, and you can actually watch the change of character video coming up after this video. So make sure you continue to watch this video to the end, then you can watch that change of character video. We basically then be going down to our 1 hour time frame at this point, and we'll be looking for a change of character. Now for this, we want to see a break of structure here in the market. We've also made what I call a manipulation. Now, if you understand the market when it's manipulating, then you know you can find a great reversal here as we drop deeper into this area of demand and we see reversal. But if you want to wait for that reversal, for that confirmation using the change of character, you need to see a breakout here, which will then in turn leave a new area of demand or your order block, and then looking for the market to come back to this area for your trade. That's your change of character. Now if I go back to the candlesticks once again, we can draw out our area here. This is our current area of demand. Now you would most probably draw it to this low if you're going to use that as your stop. Now if we're using an order block on this occasion, your order block is going to be this block of orders on this bearish move down. But we still need to see price breaking this high in the market before we can look for a trade, understanding the change of character. This is our last previous lower high. Now on a line chart, you're not going to see that wick. You're just going to see where the close price or open price is of those candles. But the concept is you can still identify this is where those lower highs are being made as price goes lower. And just like we saw in the daily time frame where we had an area where we see a consolidation, we're seeing that on a 1 hour time frame. So if we was to see price rally from here, where would you expect prices to go? Now, if you're looking at this as an area of potential supply on a 1 hour time frame, you would be correct. If we now go back to the candlesticks, you can see that this is a 1 hour area of supply. Now, if we go back to the line chart quickly, what you also notice after that area was made and that consolidation, a powerful momentum move to downside where you're most probably going to find an area of imbalance. Again, back to the candles, this is your area of imbalance, which has been left over in here, where we're going to look for price. It's going to need to fill it. That's why you expect price to now break this high, fill this imbalance, go into this area of supply, then to pull back into your area of demand or your order block. So this is my area of demand. I'll be looking for a potential reversal. And again, you can use your change of character when you come back to that area of demand. Now, all of this is taught in much more detail inside the Forex Masterclass, which you can get right now on a monthly payment plan. If you are ready to take your trading to the next level, I do suggest checking it out. The link to the course is below in the description of this video for you to find out more exactly what you'll get in the course and how you'll work with myself and other students inside the private community area. But the basis here is to understand that the use of a line chart can allow you to see where the momentum move is going and understand where those areas of supply and demand sit. Again, we can see by this move here from this high, that's your momentum move down. This is your area of consolidation where we have an area of supply. We can see the market pulls back in and falls away. Now, if we apply the candlesticks again once to the chart, you can identify that this is your area here of supply. Just draw that out as a supply zone. The market pulls back in and we drop away. We also made what we call that break of structure here. That's our break of structure, pull back for an entry. Now, once we pull back into here, you can then actually dive down to a lower time frame to find a smaller entry for a higher risk to reward trade. But understanding the use of the line chart will allow you to find these reversals. And let me just remove everything now quickly off the chart, go back to daily, and let's have another look at a previous area on the day. That's current price I'm showing you right now, potential long in the market. If we go back to the line chart, let's look at this area on the chart where we can see prices making those lower highs. Let me just, in fact, use my pen, lower highs in the market, all the way down until we break here and we make a higher high in the market. Now again, this is easily seen once you see the market goes from this downwards move and then eventually we go up. So you're just basically linking off those highs and lows in the market. And you can also identify at this point we have a break of structure. So we broke structure and we left an area here of demand. So my demand zone, we're going from the low because this is your lowest point I like to see. And obviously we're going to see there's an area here of consolidation. What happens after that consolidation? We have our momentum move to the upside. Now, these are not always going to come back for an entry. As you can see, price breaks straight through. But remember, the basis of the higher time frame, the weekly, we know that this is a bearish market. This is a pullback to continue lower. You wouldn't be looking to buy from here, but you can look to buy on a retracement back. You'll be looking to sell from this higher area. If we just go back to our order areas, we have an area of consolidation here where we were looking for a sell. So if I just quickly put the candles on the chart, you can then see that this is your last area of supply where price drops out, leaves behind again what do we see, our area here of imbalance, and this is where price pulls back into and we have a nice sell. Now based on the higher time frame, like I said in the weekly, we were looking to sell. If I go back to the line chart, this is how easy this is to see what's happening. Look, we're going to see these imbalances inside these momentum moves. And like I said, you can learn much more on the imbalances, how we look at trading those inside the masterclass course. But going back to the weekly time frame quickly, look, this is the momentum move to the downside each time. So we're still looking for sells until we see the last lower high broken on a weekly. Now back to, the daily at this point, we're just looking at that retracement move back up, but you can still capture really good profits in the market, understanding that you're taking a trade from down here to take a target here on your first target, and then you'll be looking to target these highs here. So on a 1 hour entry, let's say, that's a good risk to reward, and then you just wait for the market to perhaps pull back or looking for your areas to sell from. So if you understand all of that at the moment, you know that at this point in the market, we've had a shift in direction. We're going to be drawing out an area of demand right there. Let's just go to candles again. That is your area of demand. The market's going to pull back in. Your shift in direction is this break of structure here. You're then going to use your change of character at this area. So we go down to a 1 hour time frame. We'll find that level quickly. When the market comes back in, let's go back to our line chart. We can see that this is our last area right here, our last point in the market where we have a lower high, and we break this low, we continue to fall. Now that will be what we call a drop-based drop area of supply. We break structure here, and now we'll be able to draw out a new area of demand. Right here in the market, as price pulls back in, let's just put price on the chart. That's your demand zone. There's your entry. Now, understanding that's your entry, we'll just plot on again on the daily time frame the targets. Let's find that area. So your target would be this previous high and this high here. And we go back to the 1 hour time frame. Let's go quickly back to that area you're taking your trade. And this is how you can use a couple time frames, understanding this concept. And this will be your entry. Your stop will be just below the low of that candle. First target, you're looking at just over a 5 to 1. And your second target, remember, we're looking to take partials, nearly a 10 to 1. So that's how you can read price on the chart with the use of just that line chart. Going back to line chart, we can see we have that breakout, pullback, and again we can see that on the candles as well. But this just gives you that area where you can see the momentum move. Remember, once again, price made that V pattern here, and that's the V pattern where you want to see that break of structure, showing you that that's the reversal in the market. Then you can use the change of character for your entry, and then we can start capturing these sorts of trades, 10 to 1 risk to reward. Now, obviously you can create a better risk to reward if you was to go down here on a 5-minute time frame, 15-minute time frame, looking for a better entry. But the idea of this video was really just to teach you the concept of understanding how you can read the line chart to make it much more easier for you to see those reversals, to see the trend, to see the momentum, to see those areas of imbalance and those areas of consolidation where you can see these areas of supply and demand. Now you can also identify, as I've shown you, on a daily and this 1 hour time frame, where we also see those V patterns occurring. They are going to show you momentum move down, reversal, where you're then going to see a change of character as well. That's a 1 hour time frame. Back on the daily quickly. Let me just move the chart and we go back to current price on a daily, and we just remove everything now. There's that V pattern again. So here is a V pattern, and again here current price, V pattern. That's how you can see that. Again, at the high here, we have that V. Well, we have the upside down V, should I say. And then we have a pullback and a continuation, pullback, continuation, pullback, continuation. That's how you can easily identify those areas of consolidation. And we go back to the candles, zoom in. You can see that this is the area where price drops away, pulls back, drops away, pulls back, and continues to fall. Now here you most probably find a smaller time frame reversal. So that's just understanding the line chart. Now this doesn't cover everything that you can obviously understand how to trade with the use of an order block or supply and demand, but there is much more inside this channel to teach you about the use of order blocks and supply and demand. But if you want to learn just about supply and demand trading with the use of smart money concepts as well, as I said throughout this video, check out the Forex Masterclass today. There is a 12-month payment plan to allow you to get access right now on a very small monthly fee, so you can get your hands and start learning how to use these concepts in your own trading. Now, I hope you've enjoyed this video today. If you have, don't forget to give me that thumbs up. And if there's anything else you want to ask about what we've gone through with the use of line chart, leave a comment below this video. Now, I hope this helps going forward in your trading, but popping up right now is that video I said about the change of character as we went through in this video using the line chart for the change of character. You'll now see it on a price chart, how we use it in our trading.